Should you invest in Relaxo shares? What price should you buy the stock at? And what is the company's competitive advantage? Let's find out that and more in this video. Hi everyone, welcome to Stock Talk with Jay. I'm your host Jyotsna and wish you all a very happy new year. With this new year, I've brought to you a new video analyzing a stock called Relaxo, which is India's largest footwear manufacturing company in the non-leather segment. So let's start. Let's start the fundamental analysis by understanding the company's business and what all do they do. Relaxo is India's largest footwear manufacturer. In the last financial year, they sold more than 19 crore pairs of footwear and clocked in more than 2,300 crores as revenue from operations. The unique thing about Relaxo is that their products are in the value segment and that they have a portfolio of mass appeal brands. Their portfolio of brands have strong identities, ranging from Sparks to Flight and Bahamas. Their products range from sports shoes to Hawaii chappals and trendy flip flops, and all the way to formal shoes and school shoes. Relaxo's brands are household names and synonymous with quality, comfort, and value. Talking about the Indian footwear industry, India is the second largest producer of footwear in the world and accounts for 9% of the global market. That being said, India is still an unpenetrated market. An average Indian consumes only 1.66 pairs of footwear per annum, compared to a global average of 3 pairs. This number is even higher in developed countries, averaging at about 6 to 7 pairs per annum. So, whatever is produced in India, 90% of that is used for domestic consumption, with only 10% of the footwear being exported. In terms of global exports, India's share is just 2%, which presents a good room for growth opportunities. Now, talking about the consumer demands, footwear has evolved from being a mere necessity to an important fashion accessory. There's growing awareness about latest trends, and consumers, even in tier 2 and tier 3 cities, as well as rural markets, are becoming more and more brand conscious. Relaxo started in the year 1976, and they've had a long journey since then. In the more recent years, they have expanded their production capacity almost every other year. If you look at their manufacturing capabilities, they have 8 manufacturing facilities with a capacity to produce a massive 7.5 lakh pairs per day. Now, most of these manufacturing facilities are located in and around the Delhi NCR region. It is this sheer volume that is allowing them to take the benefit of economies of scale. Because if you see, despite having super inexpensive products, they are maintaining a gross profit margin of 60%. They have a very strong distribution network, which is one of the largest in the Indian footwear industry. If you see on this map, you can see that they have over 50,000 retailers all over the country, more than 650 distributors in almost every state, and exclusive brand outlets as well. In addition to their impressive offline presence, they also have a growing online presence. They have partnerships with all major e commerce companies like Amazon, Flipkart, Snapdeal, and Tata Click. Also, they have their own website from where customers can go ahead and place orders. Let's now take a look at the company's financials. Relaxo's average return on equity over the last 3 years has been 19.4%, and their return on capital employed has been 25.2%. They have almost negligible debt with their debt to equity ratio at 0.09. Naturally, looking at these numbers and the way their business is set to grow, their PE would be high. So their current PE or price to earning ratio is 114. Now, taking a look at their profit and loss statements, in the last decade, from March 2010 to March 2021, their sales has grown from 554 crores to more than 2,300 crores. And their profit after tax has grown from 38 crores to 292 crores. Looking at their shareholding pattern, The promoter and promoter group hold about 71% shares in the company. 18% shares are held by retail investors like you and I, and institutional investors like mutual funds or foreign portfolio investors in total hold about 10% shares. From a technical perspective, let's now look at the company's price chart. Looking at the price chart, for long term investment, a good entry point can be 1232, which is the yellow line that you see here. If the price breaks the barrier of 1436, that can also be a time to pile up more of these stocks. Overall, Relaxo can be a good investment for the long term. That being said, please note that this video is only for educational purposes. Please consult your financial advisor before making any investment decisions. If you found the video useful, give it a thumbs up. Subscribe to the channel to get the latest updates. If you have any thoughts or comments about Relaxo as an investment vehicle, drop it in the comment section below. And also, if you want me to analyze more companies, drop the names in the comment section below.